Okay, so as you can see, we took a trade here at the break of this level here, and I drew a trend line on a 5-minute chart. So I want to explain why I took this trade and what I was looking at. And keep in mind that this trade was late in the day, 40 minutes before the close, so it was a risky trade. And here's what I was looking at. Okay, so on the FibGrid, the market was down all day. It made it to the 50% on the daily range, and also the point of control from yesterday, which is the most volume, where the most volume occurred. So here's the point of control from yesterday, this lime-colored line, and that was where the most volume occurred, and that was also resistance, and it had confluence with the 50% retracement level of the daily FibGrid. Just went a little beyond. Now I don't have the mid numbers drawn in here, the 61, but I'm going to guess that this is the 61. Just for grins, let's put it in here. So these are all the Fibonacci levels that you can show in the FibGrid, and many of them I have not showing because it would just be too busy on the chart. So let's go ahead and show the 61. Okay, so here's the 61. You can see it just made it within a couple of ticks of the 61% level. And I drew a couple of trend lines on this chart. So it kind of failed here and then sold off down to the, this is today's developing value area, the two gray lines, the high and low. This is a pretty narrow range day for considering the volatility of the last couple of weeks. So it made it down to the 23%, which is was part of my thinking in taking this trade. I drew a trend line here on the 5-minute. I didn't have time to show this because this all happened so quickly and I wasn't sure I was going to take a trade or not. And I decided to go for it at the last minute. And I'll tell you why, because this was forming, and before this bar, I wasn't sure if the market was going to hold support here and rally into the close, which can happen. So I decided to wait, because this was coming back to the 20 here. This is the 20 EMA, this dotted line. And so there were several pullbacks that would have been good opportunities, but I just wasn't prepared. And on the 1-minute chart, this is a 100 period EMA, and that simulates the 20 on the 5-minute chart. So I have the cursor drawn here, global cursor on here. So look how these line up with the pullback to the 20 on the 5-minute. So really hard to show this on both charts. So here you can see the first pullback. And then we can see the second pullback right here. And there was actually a third pullback here 1 bar later. So looking at this on the chart here. Anyway, the point here is to try to show you that you can simulate the pullbacks to the on a 5-minute chart on a 1-minute chart by simply multiplying the moving average. A 20 EMA on a 5-minute is 100 EMA on a 1-minute chart. So the best signals for the 20 EMA, I believe, are off a 5-minute chart for the most part. So I was also looking at the 30-minute chart. Okay, so on the 30-minute chart, the trade was taken here at 15:11, and that was somewhere in this bar actually right after this bar. This bar closed at 1500 hours, which is 3 o'clock. And that it didn't close below here. I thought it was going to, it closed here. This was the close. And that was why I thought that maybe this bar would open up and rally. That's why I didn't go short. I wasn't ready to go short at these previous nice entry points here. Just wasn't ready to go short. So, and by the time the market got here, I wasn't sure that this was going to hold, because we had a slightly higher low here. And so that's why when this bar started to sell off, I drew a quick trend line here and engaged the auto trader, and then got taken short here. And that was correct, because it was a bounce off the 20 on the 5-minute again, and a break of this trend line. And this bar opened here and closed here. So my thinking at the time was that it would go down to the weekly 50%, and it did. And so, which is right here. But anyway, this turned out to be a nice trade, and it goes to show that you can trade on any time frame. There's opportunities for trades every step of the way. In the market environment today, on any time frame, on any chart, there are trading opportunities all day long. There's literally hundreds of them. The trick is to have patience and wait for the best setups. Okay, so as the market is trading now, notice that it came to the weekly 50% and to the tick on the 30-minute chart, a tick below. But in any case, it came to the weekly 50% and a big bounce from the weekly 50%. The low here was roughly, the 50% was at 86.14 and a quarter, and it bounced to 86.99. That's 85 ticks, 85 points, which is 340 ticks, quite a bit. So significant bounce right off the FibGrid levels. So these zones are quite valid. Just looking at the 24-hour session, opened at the 200%, FibGrid retraced down to the 50%, bounce to the, I don't have the 175 here, but you can see this is right in between here, so it bounced to the 175. And you can certainly put that on the FibGrid. You can go down here and you could color in the 175 or 176 is the actual Fibonacci number, but you could color that in if you want to define your levels more with more granularity. Okay, so now that the markets are closed, I just wanted to come back and kind of do a recap. On the 30-minute chart, you can see it came to the 50%, and we got our stats down here. It occurred to me that the chances of hitting the certain levels on the FibGrid, like the 50% level, are pretty high, and that's where you find value in these stats. So on the weekly chart, in 109 sessions, the chances of hitting the weekly FibGrid are 66%, and 58% on the 75, 53% of the time the market volatility achieved 100% of its range. But if you look at the daily FibGrid, we have a different picture here. And so this is how the daily FibGrid can come into play. The market, whatever market you're trading, in this case the NASDAQ, in the last 50 sessions, it hit 50% of the daily range 80% of the time. So wherever you are in the chart, you can expect the market to hit 50% of its daily range, 8 out of 10 sessions. In this case, it was on the upside. So this is valuable information to give you an idea of where the market might be heading and assist you in taking a bullish or bearish posture. Anyway, that's all for this video. Thanks for watching.